Mortgage rates rise to 6.32%. How to afford a home in a high interest rate environment. The average long-term U.S. mortgage rate has increased to 6.32% from 6.12% last week, marking the highest level in 5 weeks. The rise in mortgage rates can be seen as a warning sign for homebuyers, especially as we approach the spring buying season. The increase in mortgage rates comes as the Federal Reserve continues to raise its key lending rate, which is designed to cool the economy and bring down inflation, which is at a 40-year high. The Fed has already increased its benchmark lending rate by 25 basis points. 25%, at its first meeting of 2023, its eighth increase in less than a year, pushing the central bank's key rate to a range of 4.5% to 4.75%, its highest level in 15 years. The sharp increase in rates will make it more difficult for many to afford a home, adding to already high home prices. So, what can home shoppers do in a high interest rate environment? Here are 5 tips to help home buyers and sellers navigate the current market. Get pre-approved for a mortgage. Getting pre-approved for a mortgage before you start house hunting is always a good idea, but it's even more critical in a high interest rate environment. When interest rates are high, it's important to know exactly how much home you can afford so that you don't waste time looking at homes that are outside of your budget. By getting pre-approved for a mortgage, you'll also have an idea of what your monthly mortgage payment will be, which can help you budget accordingly. Shop around for the best mortgage rate. It's important to shop around and compare rates from different lenders to find the best deal. When interest rates are high, even a small difference in interest rates can make a big difference in your monthly payment and the overall cost of your mortgage. Be sure to compare the interest rates, fees, and terms of different lenders to find the best deal. Consider a shorter-term mortgage. With rates on 15-year mortgages climbing, it may be worth considering a shorter-term mortgage. While this will increase your monthly payments, it can save you money on interest in the long run. Shorter-term mortgages typically have lower interest rates than longer-term mortgages, so you'll pay less interest over the life of the loan. Negotiate with sellers. In a slowing housing market, sellers may be more willing to negotiate. If a property has been on the market for a while, the seller may be more willing to accept a lower price or offer concessions, such as paying for closing costs or offering other incentives. It's always worth trying to negotiate, but be prepared for the possibility that the seller may not be willing to budge. Be patient. In a high interest rate environment, it may take longer to find the right home. Don't rush into a purchase because you're worried rates will continue to rise. Be patient and take the time to find a home that meets your needs and budget. Keep in mind that the housing market is always changing, so if you don't find the right home right away, there may be more opportunities in the future. Rising mortgage rates to the highest level in 5 weeks are not good news for home shoppers. But by getting pre-approved for a mortgage, shopping around for the best rate, considering a shorter-term mortgage, negotiating with sellers, and being patient, you can still find a home that meets your needs and budget.